Hi, I'm Luke Alexander, CEO of Newcore Gold. I'm going to tell you today about our advanced stage entry project in Ghana. First thing I'd encourage you to do is go look at our website. I will be making forward-looking statements. While you're visiting our website, I'd encourage you to sign up for our newsletter, as well as we're very active on a lot of different social media platforms, which a number of our investors and prospective investors have found very useful. So I'd encourage you to follow us on those different platforms as well. Some of the things that differentiate Newcore from a number of other companies at our stage are highlighted here on this page. First and foremost, we've got a management team and board of directors who have a proven track record of making shareholders money. We're very well aligned with shareholders as well through our 27% ownership in the business. So we ultimately think as shareholders first, and I think that means we're very good stewards of capital. We've grown our institutional ownership from 0 to about 40% over the last year and a half. Our investors recognize the district scale opportunity that we've got at our entry project and have been keen to invest in the company as a result. Ghana is a tier 1 jurisdiction, and we'll go through that in a number of different ways. We do have a 1.4 million ounce inferred resource, so a very good resource for us to be building off of. We did put out a PEA in June, which outlined a very robust project, but our focus as a company remains on exploration, and we think that's how we'll create the most value for shareholders. And we do have a very good capital structure. In terms of the management team and board, I spent 15 years of my career on the investment banking side of the business, advising ASX, TSX, London-listed companies on different opportunities in the mining space around the world. A number of those investors are invested in Newcore today. And our board of directors, they've got a very strong track record with these companies highlighted here on the right-hand side. So a great team backing Newcore. One of our key focuses is on ESG. Our view at Newcore is that if all stakeholders benefit from a project, that's the best way to push it forward. So as a result, we are trying to adhere with as many of the UN Sustainable Development Goals as are appropriate for a company at our stage. We do have a very good capital structure, only 120 million shares outstanding and no warrants. I think that really speaks to the quality of the asset as well as the team involved. As I mentioned, 27% ownership by management and board. So we think as shareholders first. We've grown our institutional ownership from 0 to 40% over the last year and a half. And you'll see a number of those investors listed here. These are deep-pocketed, long-term focused mining and precious metals investors. We also have very strong support from the capital markets. So we've got 5 tier 1 investment banks currently covering us from a research perspective, which is great to have that kind of support. And the other thing I'd like to always highlight is we do have a very strong cash position, $13 million at the beginning of August. And that fully funds us for our 90,000 meter program, which is the largest ever drill program on this project. Ghana is a tier 1 jurisdiction to be operating in. It is Africa's largest gold producer, 6th largest gold producer globally. With that, you get a huge amount of support from the government. It's very important for the economy. It's important for the tax base, as well as there's a lot of skilled labor and good mining service companies in country for us to leverage off of. The other thing we always like to highlight about Ghana is when you look at it, they've got 4 of the top 10 largest gold producers on the planet operating in country. So I think that speaks for itself in terms of what a tier 1 jurisdiction it is. If you look at Newmont, who is the largest gold company on the planet, they currently have 14% of their global production coming from Ghana, and that's going to increase to 20% once they've invested another $750 to $850 million into the country. Where they're investing that money is to the north of us at their Ahafo project. It currently sits at a historical endowment of 15.5 million ounces. And they're going to be increasing production there by about 325,000 ounces. We've got other great neighbors along trend from us. We've got Kinross's Chirano mine. It sits at a historical endowment of 5.5 million ounces. And then the Bibiani asset with a historical endowment of 6.5. And then directly on the other side of the border from us in Cote d'Ivoire, you've got Endeavour's Afema asset. So great neighbors along trend from us. The other thing we always like to highlight to investors who aren't familiar with Ghana and our entry project is how good the infrastructure is. So we've got a paved road and power line that runs right through the middle of our project to the town of Enchi. Enchi's got about 15,000 people, so it's got all the support services we could want to push our project forward, as well as a very good labor base for us to draw upon. But it also sits far enough away from our project that we don't anticipate any issues when it comes time to bringing our project into production. It sits about 10 kilometers as a crow flies. Sitting 5 kilometers outside of town is where our core shack currently sits. Again, you can drive 100 kilometers an hour along this road. There's a power line that runs right beside it. We've got a half dozen gas stations scattered throughout our project. You drive 5-10 minutes along this dirt gravel road here. You're standing on top of our Boeing deposit. This is our Boeing deposit here. As you can see, good dirt and gravel roads that go throughout our project to give us access to all of these different drill locations, but also not a lot of population, very low rolling hills in this area and across our project, which makes it very easy to get around. I'll take you now to Sium, which sits 4 kilometers away from Boeing. Again, very low-lying topography. And what we see across our project, as well as across Ghana and most of West Africa, is you get these alluvial operations. So what this really highlights is the size of the gold system that there is in this area. You get the gold that rolls off the hills. It collects in the bottom of the valleys, and the local artisanals come along and put that mud through and dirt through sluice boxes to collect the gold. The other thing I like to highlight is we do have a very small private mine on our property. It's been in operation since World War I, operating on a very high grade vein. So it speaks to the high grade opportunity that we've got at our project as well. In terms of looking at our Enchi project in a little bit more detail, so a very large land package, 216 square kilometers in size. We've identified 25 targets to date. Where the mineralization sits is you've got the main Bibiani shear, which runs past Chirano, runs past Bibiani, then comes past our project. And where the mineralization sits is you get these second and third order splays. We've got about 100 kilometers of those splays running through our project. So again, a true district scale opportunity from that perspective. We did put out a PEA at the beginning of June, and this was really to highlight the fundamental value of our project. It was an update from a 2015 PEA. It outlines a very simple open pit heap leach project. At a $1,650 gold price, we're looking at an after-tax NPV of $212 million, after-tax IRR of 42%. And one of the things that really drives the economics is heap leach projects are low capital, as well as all that infrastructure that I highlighted to you. This PEA only included 20,000 of our current 90,000 meter program. So again, where we think we're going to create the value for shareholders is through the additional 70,000 meters of drilling that's part of this drill campaign. From a leverage to gold price perspective, our company offers that as well. If you look at the same project at an $1,850 gold price, you're looking at an after-tax NPV of $302 million, after-tax IRR of 54%, and under a 2-year payback. So very good leverage to the gold price. As part of our PEA update, we also put out an updated resource. So we currently sit at 1.4 million ounces. If you look at all the RC and diamond drilling that feeds that resource, you're looking at about 76,000 meters of drilling. So again, our view is the 70,000 meters that we're completing that sits outside of that current resource, we think will meaningfully add to it. The other thing we always like to highlight is our grade. If you look at our 1.4 million ounce resource, about 85% of it sits within the oxide transitional zones. And if you look at oxide transitional projects globally, you're typically looking at about 0.4 to 0.5 grams per ton. So that grade really helps drive the economics. It also drives a 0.2 cutoff, which was used in the resource update. If you were to increase that to 0.5 grams per ton, you're still looking at over 1 million ounces at roughly 1 gram per ton. So a very good resource for us to be building off of. This is our 90,000 meter drill program. We are continuing to focus on our existing resource areas. All of them remain open and along strike. We're also going back to some previously drill tested areas. looking to add additional mineralization there. And then we're also very excited to be drilling some new areas for the first time ever and hope to make some new discoveries in those areas. I'll now take you to our project and have a quick look at it in a bit of detail. So we've got our Sium deposit, which sits here. It's our largest deposit, followed by Boeing, Nyam, and Quachikrum. To date, we've still only explored on about 10% of our total project. What we're looking at here is our Sium deposit. It sits at 725,000 ounces. These are the pits that constrain that 1.4 million ounces. And what you'll see as I take you around these deposits is you'll see a lot of the drilling that we've done that sits outside of that current pit constrained resource. Boeing is our second largest deposit. It sits at about 500,000 ounces. And again, what we're looking at here is the pit constrained resource, which sits within a 2.8 kilometer strike length. And we've now added meaningfully to the north 400 meters and 1 kilometer to the south. So pretty easy to see what the potential impact of that could have, as well as stepping out along strike, both up dip and down dip at all of our different resource areas. The last two areas that I will highlight are Nyam and Quachikrum. We've got resources in both of these areas. Nyam sits here, Quachikrum to the south of that. And as you can see, we've continued to add mineralization at all of these areas, as well as previously drill tested areas like Kojina Hill, which are currently not included in our resource. The last thing I'll talk to you about is the opportunity at depth. And this is something that we're very excited about. What we see at these greenstone-hosted deposits along the Sefwi-Bibiani belt is that as you start to drill deeper and get into the sulfides, you start to find higher grades and really increase the overall size of the resource. As I highlighted, currently 85% of our resource sits within the oxide transitional category. Those pits that I was showing you are only down to 63 meters. And we're excited for the first time ever as part of this 90,000 meter drill program to be drilling below 150 meters. And we've had some very encouraging results. When we look at Chirano, which is the long section here, you can pretty clearly see that as you start to drill deeper below that oxide level, these things really grow in size. In terms of some of the results that we've had so far, if I take you now and look at a cross section at our Nyam deposit, again, very nice open pit heap leach material captured within these pits here. But as we started to drill deeper in this hole number 45 down to 175, 200 meters below surface, which is the deepest ever drilled here, we've hit 5.4 grams over 9 meters. Similarly, 100 meters away at Nyam within hole number 47, down at 175, 200 meters below surface, we've hit 5.8 grams over 7 meters. When I spin you around and look at this from a long perspective, it's pretty clear to see there's just a lack of drilling at depth. So we're very excited to be hitting some high grade here, and we'll do a bunch of follow-up drilling on those high grade results. Last example I'll point to from a high grade perspective is back over at Boeing, which again is our second largest deposit. Within these holes here, which are not included in our current resource, we've hit 95 grams over 2 meters, 13 grams over 1 meter. So those are the kind of high grade results that will really complement all the near surface drilling that we're doing from a step out perspective across all of our different deposits. So just to recap, Newcore is backed by a top tier management team who are truly aligned through our 27% ownership in the business. Very strong capital market support and institutional backing. Ghana is a tier 1 jurisdiction. Don't listen to me. Look at what Newmont, Anglo, Goldfields, Kinross are doing in country. The company is very well fundamentally supported with the PEA that we put out. But where we're going to create value from here is through the additional 70,000 meters of results that will go into future studies. I'd encourage you to reach out, look us up online, and thank you very much for your time.